I'm Shae Russell for mining.com.au, and joining me today is Grant Haywood, the Managing Director for Horizon Minerals. Grant, it's fabulous to have you on. How are you?
Yeah, I'm well, thanks, Shae. Pleasure to be here.
It certainly would be, because what a great time it is to be pouring gold in this market. Horizon Minerals have done it not once but twice in the past month, and that is two first gold pours. The most recently one coming from your Phillips Find gold mine. Mate, first of all, congratulations. Second of all, what's the bigger picture here for the Phillips Find gold mine?
Yeah, thanks, Shae. As you viewers are probably aware, it takes a long period of time to get into gold production. So we announced this deal with a JV partner in August. We got all our approvals in place. We started mining in October, and very pleased to get first gold bars this week. So we're processing 40,000 tonnes of ore at the moment, and this project we're looking to treat 200,000 tonnes over the next sort of 6 months.
Yeah, look, it's no mean feat to get that gold out of the ground and then be able to start processing it. Now, I know for the moment you're actually having it processed off-site via a third party, but there is a recent merger that has happened where you'll be acquiring a nickel plant and you're eventually going to turn that into a gold processing plant. Tell me, what are the benefits of doing this? Is it cheaper to do it this way than to build your own processing plant?
Yeah, certainly is cheaper. So as we mentioned, Phillips Find, we're treating 200,000 tonnes through a third-party processing facility near Coolgardie. We're also mining a Boorara project and poured first gold bars there last month as well. So we've got a 1.2 million tonne per annum agreement with Norton Goldfields to treat at their Paddington plant. So we've got two great parties that we can work with. But what we don't have is the opportunity to produce gold under our own steam, and we are reliant on that third-party infrastructure. So by this merger and getting the jewel in the crown, which is the Black Swan processing facility, it allows us to produce gold under our own steam. So this is a nickel plant. So whether it's a gold plant or a nickel plant, the front end's always the same with the crushing and the grinding circuits. So we're going to refurbish those and fix those up. And what we're going to do is build the gold circuit in and around the current concentration circuit. So what it does for us is it gives us the keys to our destiny in our own hands. We're not relying on third-party infrastructure. And normally you're paying, somewhere between $25 to $35 a tonne more through processing through third parties. So it brings significant savings to the business from a processing cost point of view as well.
Certainly would. Now, finally, this is an unfair place for me to take it now, especially after you've been able to get two mines pouring gold so quickly. What comes next? I mean, how do you follow this up? What's the next thing investors can expect to hear from you?
Yeah, well, we are producing from two mines. We've acquired this plant. So next steps for us is actually to do the study work. So we've got two streams of study work. The first one is to do the engineering work on the processing plant, so to do a definitive feasibility study. And we'll do that over the course of this year. What that'll do is it'll give us a very accurate cost estimate and time estimate on refurbishing the plant. We believe it's around a 9-month refurbishment time frame. But the other thing we need to do in parallel is a mining study. So we want to feed this plant for a long period of time as well. So we've got a strong resource base of 1.8 million ounces in the ground. What we want to do with this plant is refurbish it next year and get it on stream late in 2026. So the targets we're looking at is a 1.5 million tonne per annum processing plant, putting our ore through it and trying to hit the run rate of 100,000 ounces per annum. So that's the goal. So big year of studies this year, financial investment decision late this year, and then hopefully refurbishing the plant and turning it on in late 2026.
Just to sort of really bring this home here, obviously you're pouring gold, which means you'll be generating revenue at a very impressive gold price in Australian dollars of around $4,600 per ounce. I assume that you'll be pouring this gold at fairly healthy margins.
Yeah, we are. We've put in the market our Boorara project, so we're trading 1.2 million tonnes, generating 46,000 ounces, and at a $3,600 an ounce gold price in Australian dollar terms, we're making $30 million from that project over the next 16 months. So that's pretty healthy. And gold prices are around $1,000 an ounce higher than that. So we're going to make really strong margins from that. And obviously under our own steam through our own plant, we'd have the opportunity of probably making another $30 million on top of that just through processing costs in the future. So very leveraged to a strong gold price, and with our own plant, we'll obviously be able to make even stronger margins.
Listen, Grant, it is a great time to be in gold, and thank you so much for being here today. I cannot wait to see what comes next.
Yeah, thanks very much, Shae. It's been a pleasure.